Here we go. Welcome aboard to, another market live stream. Today is a half day. We are 7 days, 1 week away from closing the House Hack fundraise. Back from vacation, feels great. Little bit of soreness, fell too many times skiing like a dummy, but that's okay. It was fun, and yeah, it's kind of crazy. I think, the days I was gone, we raised somewhere around $700,000, like Friday, Saturday, Sunday, Monday, and it's like, maybe even Tuesday. And I'm like, I haven't posted a video in like 4 days. I'm like, this is crazy. So anyway, we're back. So nice to be back. And yeah, remember, not a solicitation, but check out househack.com. That fundraise ends soon. And then we're excited because we just released the Meet Kevin app update. So if you haven't updated that, update that, because then we'll be able to start toggling on the Reinvest AI feature individually for everyone. So, what do we got here? We got a slow slog continuing on the queues, which isn't a surprise. We're pretty dull in terms of catalysts until Jan 9. So there's really nothing exciting here unless some like pooper duper hits the fan in the what's it called? AI sector. But I want to take an updated look at Oracle quickly, just from a CDS perspective. I hate the business, yeah, but they have bottomed out finally. So the stock's bottomed out. At least for now, we've seen a bottom on this stock before, and only to go lower, right? So Oracle CDSs have been kind of just a little bit of like a little risk appetite barometer. So let's go and take a look here. Oracle CDS. Oracle CDS, a line chart. We are looking at 144. So we've actually come back down a little bit to settle down. Let's take a screen grab of that puppy. I don't like that. Let's do it like so. It's not confusing that way. Oh, can we get it to work? Oh. There we go. All right, perfect. You gotta press the right buttons, Kevin. Okay, cool. So I want you to see it. So we'll just upload it over here. We'll go. We'll call it Oracle CDS and jot this down. This is. It's Christmas Eve. I guess everything's just loading slowly. Anyway, it's back down to like 144, which is great because it's off its highs. The maddening highs that it had of where were we? We were like 154 there for a moment. So CDS 5-year back down to 144. It's still elevated. It's still the highest since 2008, but it shows that at least some of the pressure is declining slowly, which is good. Now, there's news this morning about GPT wanting to start throwing ads in. I think that's a pinnacle moment for them in terms of user growth. I know they're trying to generate revenue, but boy, I feel like that's just a great way to piss off free users. And Google's just gonna be like, fine, you go try to do that. We'll keep playing our game. Yeah, here it is. Okay, so there we go. Finally got that to load. That took forever. 144.6 back down over here. So not bad. A little bit of relaxation there, which is great. Then let's go. Let me take a look at the information because the information had a piece on this. So Tom from MySpace, what's up, man? Yeah, I don't know anything about REAX, but let's take a look at this. Appreciate the $2. OpenAI's ads push starts taking shape. So let me take a look at this. How are they going to integrate this? OpenAI executives have kept a lid on how the company could show advertisements to users of its popular GPT bot, leaving the broader digital ad industry eager for clues. Behind the scenes, staff are working through key details. Employees have discussed ways to tweak AI models. Oh, no. See, that right there, that is the death of OpenAI, in my opinion, because your trust goes to crap. Once people know that you're actually scamming the query, they need to be if they're not disclosed, people are gonna be pissed. let's see here. So here it says, Sephora-sponsored beauty product ad could appear when a user is searching for mascara recommendations. In recent weeks, OpenAI employees have been creating mock-ups for different ways ads could appear. GPT, 900 million users, dwarf the biggest social media search companies, dwarf all but the largest. Publicly, Sam Altman has downplayed the desire to advertise. OpenAI has been staffing up digital advertising revenue veterans and adding shopping features that could springboard into retail-focused ads. Company sees an opportunity to create new types of digital ads. Rather than simply replicating existing formats like social media ads, OpenAI collects a lot of information about users' interests. Oh, great. Yeah, okay, so use people's information to sell them stuff. I mean, isn't that what Amazon does? That's why they wanted voice bots in everybody's homes so they can, see what you want to buy, so they can just conveniently feed you that back to you. And it's like, here, this is what you want to buy. Oh, how'd you know? Oh, well, maybe because we listen to every word you say. The information, as previously reported, analysts and ad industry executives say GPT conversations where users are clearly looking to buy something could be an advertising goldmine. Yeah, I don't disagree with that. One of the options staff has discussed is giving sponsored information preferential treatment in responses to queries. AI models could prioritize sponsor content. Right. It just has to, in my opinion, be disclosed that it's an ad. Because then the trust factor goes down if it's, not disclosed. Ad mock-ups have included displaying sponsored information in a sidebar. Yeah, then it gets cluttery, though. You start doing sidebars, that's going to look funky. Is evaluating how to show ads without turning off users who might object to chats stuffed with sponsored content or sharing personal conversations that they think are influenced by advertisers. Yeah, exactly. They want to show ads as unobtrusively as possible to users to ensure that the company doesn't lose the user's trust. Well, but if you're hiding the ad, then that's exactly what you end up doing. That could mean ads show up only once a user conversation has progressed in a certain direction. One ad mockup showed display ads as a secondary step in GPT once a user has expressed interest in finding more information rather than the initial response, who cares. If a user asks GPT to make an itinerary, chatbot could suggest, visiting whatever. Suggestion wouldn't be sponsored, but if the user clicks on a link for whatever, a pop-up notice could appear with multiple sponsored links to different businesses that offer tours. I mean, I get it. There's some function of that as well. As GPT becomes more capable and widely used, we're looking at ways to continue offering more intelligence to everyone. Right, yeah, blah, blah, blah. All right. Sensitive topic about hurting user trust. Right. Just last May, Altman said, oh, that's because they're out of money. Oh, that's really what's going on here, dude. Oh my gosh, they have no money. That's the problem. They need to do ads. So they know ads are like the top, the like, how should I put it? Like, the easy days of user growth are over. So we know that. OpenAI. Easy days of user growth are open. Sam Altman said last May, ads are a last resort. Let's snag that quickly here. And in my opinion, they recognize just like I do and worry about that sponsored results potentially kill the some of the trust factor in GPT. I wouldn't be surprised if Gemini waits. Google will play long game to see how this plays out at OpenAI. But I think OpenAI has to, because they're out of money. And their last $100 million fundraise is stalling. 100M fundraise is stalling. Let's go find out where they sit with that. $100 million, 100 bill, I actually think it is. OpenAI. Over. Let's fix that. Okay, there we go. $100 billion. So, yeah, this was the story. OpenAI is in talks to raise up to $100 billion in funding that could value them at 830 bill, Wall Street Journal reported, is aiming to raise the funding by the end of the calendar first quarter next year. Right. So goal now is to close that fundraise by, March 31, 2026. Why all of a sudden, does it take 4 months? Why 4 months to fundraise all of a sudden? They used to, that's the thing, is that's sort of the cycle. That's the cycle. Early days, easy to raise, and then the money slows. If you're burning, you start looking at the commitments you've made and getting nervous. There we go. So let's see here. Let's go back to that. Let's see what else there is. Advertising would be a last resort. Selling ads would help OpenAI wring more revenue from its consumer business. Blah, blah, blah. We know. Start of the year, OpenAI projected the average revenue per user from a free user monetization, meaning money made from OpenAI's non-paying users, would be $2 per year starting next year and $15 by the end of a decade. Maybe. And that's per year. That actually seems like a reasonable forecast. It's very low, mind you. Somebody paying $20 a month or even $200 per month for some of the quote-unquote bleeding edge models. So much more valuable. So, in this case, somebody paying $200 a month basically pays for 100 advertising folks. I mean, think about this. That's like one $200 per month client, but you have to annualize this, which is $2,400 a year. That would be like 1,200 free GPT users. That would be like 1,200 free GPT users in 2026. Or if somebody's still paying $200 for this stuff in 2030, that'd be wild. But anyway, $2,400 divided by 15, that'd be like 160 free GPT users in 2030. So it does shows that the early, bleeding edge adopters willing to pay $200 a month might have been the unicorns that got the industry excited, but the rest of people won't be very profitable. I think that's actually a big red flag. Yeah, because so unsurprisingly, if free or like if Workspace, I'll put it this way, Workspace included Gemini is as good or better than $200 a month GPT, then you cancel GPT and Gemini scrambles to get 160 to 1,200 people to replace you. It's almost actually kind of like the early Tesla adopters, right? Feels a bit early EV adopter-like, So you get this, like, the first wave of people who are like, oh yeah, I'm down. And then, like, the first wave is easy. Getting the next wave of payers is hard. Wouldn't surprise me. Okay. All right. So back to this. The company, rest moments, people won't pay $200 a month as other models. Exactly. I totally agree. Tom from MySpace says, I use OpenAI myself. Should I try Gemini? It's funny. I had I mentioned this in the course live. I had like a dinner date, if you will, yesterday. I was up until like 1, probably shouldn't have been. But anyway, so we're hanging out and, when one person takes out OpenAI, I didn't say anything, or takes out GPT. I didn't say anything. And then the other person's like, oh, you use GPT. That's so, that's the old vogue. Now Gemini's in. And it's funny because it's exactly what I think. Now maybe that's confirmation bias, right? Because I also tell Lauren, she uses GPT because I got her into GPT and now she loves GPT. And I'm like, you gotta switch to Gemini. I think I'm just gonna take her phone today and just install Gemini and put the icon where GPT was. But yeah, I think it's so much better. So I don't know. I think everybody should try it. And I don't own any Google stock. I'm not trying to shill Google. I've been saying it for, how long have I been saying this now? I feel like I sound like a broken record. Probably since early November, before the 3.0 moment for it. But yeah, I mean, that's the thing, is like, this is commoditization. And so then, of course, the problem is, how much did we prop up valuations on 1.4 trillion in spend? Now, in fairness, the market is discounting some of this. Market seems to be discounting some. NVIDIA fair value on these projections is $300. So think about that. NVIDIA has a fair value on these growth projections based on that 1.4 trillion in spend actually happening. NVIDIA fair value on those growth projections is $300. Why is it selling for 180, 190? Well, probably because people are looking at this and going, I don't know, man, like, this is commoditizing a lot faster than we thought. Yeah. So he says, is Gemini free? Most people who have, most people who have a Google email at like work or whatever have Gemini already included. So like, our email, like staff@meetkevin.com or ir@househack.com, right? Or whatever, staff@reinvest.com. Like those are all Gmails, right? They're just custom domains. In every single one of those emails, Gemini's included. So like the marginal cost of us having a great Gemini Pro product is basically zero. I mean, I'm sure they raise prices, $5 or whatever a month per Gmail account. So maybe it's $5. But, businesses just aren't going to notice it. So if you already have a Gmail account, it really should be a rounding error. Again, a business Gmail account. Now, if you had a free Gmail account, just personal account, you probably have to pay. But I think it's worth it. Try it for a month and see. Again, not sponsored. I got no horse in the race. I don't really care. I think of it as like, just good advice. The company also expects its products focused on OpenAI's non-paying users would have gross profit margins similar to those of Meta. See, but the problem is people forget that Meta is this time vampire of you go on there to scroll or to like see into, behind the scenes of people's lives or whatever. Like, I don't know if you saw some of my Instagram stories or whatever from our skiing. I thought it was really cool, and it just gives you a different perspective and sort of look on things. But that's very different from just an AI bot here. Kevin, I got a really good idea for a movie. Oh no. Caught in a plane and Kevin went to the Middle East. What's funny is Jack yesterday, he's 10, and he's like, Dad, I'm from Iraq, but then Iran. And I'm like, now he's coming up with the dad jokes. I'm like, okay, all right. Or I don't know where he hears it, but I'm like, oh man. Or he probably said something like, I used to live in Iraq, but I ran. Anyway. Overall, OpenAI is this summer projected around $110 billion in revenue from non-paying users. Yeah, this seems ludicrous because if you think about it, $110 billion in revenue. So think about that. OpenAI projects $110 billion in revenue from non-paying users when? Through 2030. So that's 5 years, right? 26, 7, 8, 9, 10. Yes, 5 years. Okay, so 5 years. Let's divide this out. $110 billion. There we go. That's $110 billion. Divided by 5, which is your annual. Divided by, I mean, how many non-paying users do we have? Probably most of them. Let's call it, I'm going to call it 700 million non-paying users. So what are they projecting? This number would be how much they're projecting on an annual basis. It is $31. So to me, that doesn't really align. That's $31 per month, per year. They're expecting, assuming 700 mil users, right? Because this portion, they said, I should probably screenshot that to make that a little more clear, and just in case they change it. And then we have it documented. Let's see here. That's Kevin being jaded. Okay, that's fine. So, to me, that's kind of wild. That's an outlandish expectation if they're bluntly saying maybe we'll get to, where was it? What was it, 15 a year? Or what they say here? Yeah, 15 a year by the end of the decade. If they're bluntly saying in 2026, a free user would yield $2 and 15 in 2030 per year. This is, I think they're assuming user growth will go up forever. And I think that's the mistake in the in the analysis, if you will. But we'll see. Okay, so let's see here. OpenAI has to balance developing ads, blah, blah, blah. Let's see here. Code red. Another hurdle. GPT ad business is that consumers are still just catching on to using AI for online browsing and shopping. Only 2.1% of GPT queries were related to purchasable products. That's interesting. That's also fascinating. I didn't even think about that. Like, what percentage of your actual queries, 2.1% of queries relate to purchasing. That's interesting. Okay, so then I've got OpenAI shop and focus, blah, blah, blah. Top of encouraging people to shop and use GPT. When OpenAI released specification on merchants, provide information, thousands of brands signed a waitlist to submit data. According to a person who spoke with company executives, already brands have responded to more people using AI by changing their site descriptions, whatever. For now, little word about GPT ads filtered out to potential advertisers, blah, blah, blah. Okay, yeah, that's all boring. Okay, interesting from the information. Hey, Kevin, can you look at Hood Polymorph? Yeah, I don't really want to look at it. I don't really want to pull it up. I'm not trying to tell you how to play a prediction market. I've never played the prediction market. I just think Waller is the right choice. I made a whole video on it. I made a whole video on how I would bet on Waller, or certainly wouldn't bet on Warsh. But there's no deeper look for me to do there. That's, the extent of my thought. I'm not here to give you financial advice on, okay, man, do this or whatever. Like, sorry. Anyway. Okay, cool. So, let's take a look at this. 2 IPO-bound AI model developers. 2 Chinese AI startups. Well, that's the thing, too, is, the Chinese are going to create some massive deflation. 2 Chinese, they already are in manufacturing. Startups are vying to be the first publicly traded AI models in the global stock market. Chinese firms' IPO filings offer a window into the hardship facing smaller AI firms that don't have older cash cow businesses like Google. Minimax and Atlas, better known as Zippo, both recently received regulatory approval to go public in the Hong Kong exchange. Okay, both will likely do so within the next few weeks. And unlike Alibaba, a large conglomerate, and DeepSeek, which is funded by their hedge fund, Minimax and Zippo are mostly funded by venture capital. Oh, that's cool. But that private pool of capital is limited because of Washington's restrictions. Okay, I mean, that makes sense. The 2 apps have 25.6 million users, and let's see here. Contribute 70% of Minimax, 50% for the 9 months ended. Okay, interesting. So they made $53 million with their AI role play app Talkie and AI video app. Okay, so with these two apps, they made $53 million, but they spent $211 million. And they have $363 million in cash at the end of September, enough to last 15 months without additional funding. Well, that's why they're going public, because they need the money. They need the money. Whoa, the gross profit from AI apps, from the consumer, right? Like the query apps, 4.7%. That's terrible. And that's why they're trying to sell the application programming interface, which has a gross margin of 69%. Of course. I actually think, specific use case AI has that's where the big money is. I mean, I know you all know I'm like super obviously excited about our house hack AI. But part of that is because I think the margins of selling an AI product that's very specific. It's like, we will solve a problem for you. Dear agents, we will make it so that rather than you having to send your clients listings every single day, handpicking them, we will custom brand it so you can notify your clients of the best deals that hit the market anywhere in the country automatically with our trained AI. In my opinion, an agent is actually willing to pay $200, $300, $400 a month for that, because it actually becomes a core part of the business. And that's where the margins are compared to, something ubiquitous like, a chatbot or like a role play app. I mean, that was like so 2023, everybody was using these role play apps. That's my take, I don't know. But that's actually what's partly motivated us to close the fundraise on the 31st. Because I'm looking at this, I'm like, why dilute the stock, issuing, like, basically letting people invest? Because if we can make a crap load of money on the AI, let's just do that. And, then we don't need to raise money and we don't need to sell shares. We get to keep more shares for ourselves. So that's my game plan for 26 at least. I'm pretty excited about it. So anyway, overall gross margins. So, but honestly, on the consumer at 4.7%, I mean, that's crazy. That's the gross profit side. Because then you have, G&A. How do you even scale that up? That's kind of, I'm gonna write that down. I think that's kind of wild. Chinese Minimax, upcoming Hong Kong IPO. Just 15 month of cash left. 4.7% gross margin on general chatbot roleplay app video generator. Specific solutions like for coding equal 69% gross margins. That very much aligns with my take on AI. So somebody says, every internet company has always wanted to be the everything app. Yeah, I get that, because you want, like Robinhood, they want to do banking, this, that, or whatever. They're fine, good for them. I obviously don't know, but I guess my point of view is I'm going to take a very niche approach and go, no, we're just going to solve real estate AI. For agents, homeowners who want to remodel or whatever. And I think there's a boom of money to be made there. We've already been killing it with our revenues. We've made more money on AI than we've spent on AI, which is great. Like, to me, I'm like, maybe there's no AI recession. But then again, I think, Sam Altman is a little loony, and some of the numbers we're looking at here sort of reiterate his looniness. Okay, cool. So what? I don't understand your question, Tom. How's that net? Like net? Oh, we went EPS for the quarter through December 12th because we started selling our AI. That just we were on track to go EPS profitable, but through December 12th, we went EPS profitable. That's with interest and depreciation. So I don't know how the last, 10 weeks, or sorry, 10 days have been, I'm sure fine. But, we'll post all our financials like we always do. But I'm really excited about it because, if that's just from 2 weeks of AI, what's a whole year of AI revenue going to look like? So we'll see. That's why I'm like, why are we selling shares? Like, let's play the AI game out next year and stop selling shares to people. So Minimax's overall gross margins for the first 9 months was 23%. So that's when you average it out. Right. So that is interesting specificity, though. And that kind of shows you where they said OpenAI projected 24% gross margin would be around 46%. See, but I don't trust them because they're losing money like crazy. And so I don't know how they're calculating their gross margin. I just don't trust them. Tom from MySpace, dude, that's awesome. Hefner says, we're really excited. So it's like for a little startup to go EPS profitable with depreciation and interest is crazy. Because on a real estate company, depreciation's huge. What are we writing off a quarter? I think we're doing like 300 grand. Don't quote me on this. I think it's something like 300 grand of depreciation a quarter, which is great because it's just like a paper write-off, right? So you pay lower taxes. Real estate depreciation is so great for sheltering other income. It's fantastic. I think real estate's like this little piggy bank too. But anyway, people don't like real estate. Yeah, I get it. But I think that's why there's money to be made. Minimax, solid margin for API sales is notable because Chinese firms sell new models at a low price relative to proprietary models sold by American firms. Minimax may eliminated idle computing using resources and extracted more output from every server chip it used. Fine. Where this is an open source LLM, blah, blah, blah. Meanwhile, founded... This one generated 27 million revenue, 85% from helping enterprise customers like state-owned. Yeah, also net loss. Wow, the company reported a net loss of $334 million in the first half of the year. Wow. Well, I guess we'll see. But yeah, making money from the commoditized product, huh? I'm going to write that down here. I think that's very interesting. Okay, so let's throw that in here. Biggest lesson I've learned in the job, don't do any China/Hong Kong local stocks. After, so you did IPO work at an investment bank. Yeah, I have to say I have a really big home bias. I like Train America a lot. Big home bias there, so sorry. Is House Hack market cap over 100 mil? Well, I guess it depends how you value it, eh? We're selling convertibles now. I mean, probably, because our book value is certainly somewhere around 70 to 90 mil. That's just off the top of my head. It sort of depends on, because some people are like, oh, you can't calculate wedge deals because that upside of equity, doesn't get realized unless you sell it. And it's like, well, we don't want to sell the asset. So it's kind of like, how do you calculate that? It's a little messy with real estate companies that way. But yeah, I mean, if you took, just as a ballpark, 80 times, 1.4, I guess that'd be 112, right? So I guess so. Okay, cool. So let's see here. Somebody says we had a nice little snow dump. There was so little snow this weekend. It was crazy. We actually, I think we got really lucky. We got snow. We got about 3 inches right when we landed. So we landed and then it started snowing, which is like best case scenario if you're flying into Heber. That's a crazy airport to fly into. But yeah, anyway, Tahoe, wow. Okay, cool. So now let's go take a peek at comps. Yeah, I mean, well, people usually look at real estate companies as 2 times book. So if you did 2 times book, it'd be like 160, right? But, that also depends on where we stand with all the current numbers. I don't have those in front of me right now. But anyway, we're really excited about the AI. And I think this really relates to what we're seeing here with these numbers. And I think, again, it's not supposed to shill House Hack or whatever. This is not investment solicitation or whatever. It's to show that the margins, the money is in very specific AI. And I think that's like the lesson. I'm gonna put the little siren emoji. There we go. So I'm gonna say to me, the lesson is niche down for AI. That's where the big money is. Think Palantir, niche down to rich enterprises. Brilliant, right? And I think that's why Palantir's done so phenomenally well. Very specific customer that they want. They don't want everyone. They want the customer that says, I see the value in your product. I am willing to pay because it'll make me a positive ROI. Like, that's always a win-win product, right? So this way, when an enterprise is willing to say, hey, I will pay for your product because I know I'm going to make money from it, that is a great customer to have. The free customer doesn't care. They'll move to any other app they perceive is better. Think of Kevin, Kevin's GPT to Gemini flip-flop. Dude, I was so blunt on that in early November 2025. It was like instant. I removed GPT from my favorite spots on like my phone or whatever, or hotkeys or whatever. It all became Gemini. And it's so hard to get people to flip back. Once people go to Gemini, let's say, I think it's borderline impossible to get them to consistently come back. I think that's why GPT keeps offering me 3 months of GPT to come back, because they realized like I was one of those early adopters. They realized I was an early adopter willing to pay $200 a month, right? And now I'm not. Now I've taken that somewhere else, and they're like, oh my gosh, how can we get the Kevins back? You lose those $200 a month people, you're screwed, man. All your revenue projections go out the window. My take. I don't know. I don't see enough from America, but I'm blown away how many ski hills are within such a short distance of Salt Lake City. Yeah, I think Salt Lake is a great airport. I think Heber is a very dangerous airport. I don't recommend people flying to Heber during the winter. I don't think I'm gonna go back into Heber. It's a nail biter every time you go into there. There's no good instrument approach. You're in a bowl of rocks, basically. So anyway. So I want to invest $25K in house hack while I can. Do I have time to wire transfer, or should I use a credit card? Somebody's gonna think you're a bot, because that's like, it's like, hey guys, donate so you're gonna invest. I don't do that, but the way you worded it, thank you, I appreciate it, but that's funny. Yeah, no, you can do whatever you want. If you sign up, you go to reinvest.co or househack.com or whatever, and you fill out the info to invest. We prefer when people wire or ACH us, because it doesn't charge the company the transaction fees with a credit card. Like, if you've only got like a 1% rewards card or whatever, like, you're gaining 1% and Househack is paying like 3%, right? And so we pay those fees when people invest with card. But yeah, I mean, it doesn't matter. Whatever you want. There's still a week left. I crashed, and my arm really hurts when I crash skiing. Like, I wear a helmet and everything, right? But I don't know if it's because I'm like 33. Oh no, the joints are starting to hurt. Or maybe we just went too hard. But it was fun. Okay, let's go. Wow, we've only been on the information, so let's go pop off of them. Okay, cool. So stocks hold. Russia seeks changes to peace plan. Putin is I think, a scam. He anything he can do to buy time from Trump is the way he plays Trump. That's my take. So yeah. You assume they generate more revenue from the $200 a month people than 20-month people. No, that's not what I'm saying. I'm saying that a $200 a month user is worth right now, I mean, we wrote this down, right? I'm saying a $200 a month user is worth like 1,200 free GPT users in 2026, including their advertising. That's crazy. So that makes these these people willing to shell out $200 a month. You know, that's like an old school car payment. I say old school because rates are so ridiculous now. That, you know, that's a lot. So Southern California in quote great danger from Christmas flooding. It's raining like crazy. I will say it's kind of wild. All right, what else? Epstein files appease almost no one. Intel shares. What is this halt of production test? So let's take a look at this. NVIDIA. All right. And I love NVIDIA's margins and their business. I always get nervous about their reliance on people like Sam Altman. But Intel shares fell after a report that NVIDIA halted a test to use Intel's production process. Well, that's not good. Stop moving forward on the A18 process. Wow. Well, that's very interesting. So NVIDIA, Intel. Now, there are a few potential reasons for that, but let's see here. 18A process with Intel halted. Either Intel sucks or NVIDIA, is good with the supply chain. Honestly, like, here's like I have a very evil thought about this. Okay, ready for this? Evil thought. NVIDIA has TSMC on lock, so let's make Intel look bad to get people to try to get back to TSMC, but NVIDIA has the largest, commitments from TSM, so NVIDIA moat strengthens. That's the evil point of view. Because if everybody thought Intel would have all of this extra supply capacity, so if everyone thought Intel had endless supply and was as good as TSMC, chip prices might plummet fast. That's an evil idea, right? Just an evil thought. Like a 4D chess kind of move, right? I just used the language pre-COVID car payment, referencing the payment on a home repair loan I took out. Well, there you go. Pre-COVID car payment. I like that. Somebody say niche down AI is based on standard models. If it's big money, then how OpenAI, Anthropic, Gemini of the world not make big money? No, I disagree with that. I do think that there are a lot of wrappers. But for example, like we have our own AI model, but it's not like a large language learning model. No, I mean, you could leverage the commoditized versions of those very cheaply, right? But the underlying MLs that, we tune, that we weight, that we rate, properties or valuations on or whatever, that's proprietary. And I think that's where the real value is. So just because you're using, I mean, like your argument is kind of like, oh, well, hey, Kevin, to live stream, you have to plug into a 120 volt circuit, so they're the utility company's gonna make money. And I'm like, yeah, they're gonna make 30 cents for every hour I'm live streaming or whatever. Who cares? Or whatever. Maybe it's even $1 or $2. Who cares? Like it's so nominal. And I think that's the argument with the commoditized LLMs is that, who cares about the LLM part? That's not where the value is. It's in the custom AI and then the custom product. I don't know, but maybe we'll be wrong, right? Like I don't want to hype it so much. I guess I'm just excited because we're about to release the app, and then we're going to raise the price on the Reinvest AI, which, people are still buying, which is amazing. Because I'm on vacation and people are still buying the Reinvest AI because we're about to drop it. And then, of course, when we do, we're going to raise the price. But anyway, so where were we? Okay. Intel opened a new factory in Arizona known as Fab 52, goes into mass production with a 18A technique. The company said it's kind of, okay, let's see. Taiwan Semi reasserted its leadership, blah, blah, blah. NVIDIA agreed to invest $5 billion. Yeah, but part of that was to shill for Trump. Deal didn't include a deal to make chips. 18A is a bid to return their best offerings in-house. Technology contains new features that they say are breakthroughs, blah, 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 blah. Okay, so we don't know why. Jason says release the app. Yeah, that's the coupon code. That's funny. Yeah. Release the app. Like, release the files. I love it. The Epstein drama is crazy. Okay, so that's interesting. Okay, U.S. rare earth buyers. Oh, how's MP doing? Because I still have a $31 target on them. But then again, I called that at 100. Oh, we're still getting there. We just lost this line. You know, I remember over here at 80 at this, we double rejected 80. And I'm like, if we break 80.94, we're going to 100. Sure enough, we broke 80.94. And then at 100, I remember in the course member live stream, I'm like, this is it. It's at 104 pre-market. It's going down to 31. It's down like 50% since then. You all know that. That's the alpha report stuff. Okay, cool. So, what else? Still see China curves despite Trump deal. Yeah, that doesn't surprise me. It's all a game. That's why I don't think the TikTok deal is going to get approved by China anytime soon either. Oh, let's look at global times. So, let's go see what the Chinese have. China, Japan... Radiation, okay, so they're dumping on Japan. Unburdening, space cooperation, accelerated arms transfers to allies, threatens regional peace. Right, well, this is classic Chinese saber rattling. Let's see here. No, there's nothing really exciting here. Pentagon report hyping China's military buildup distorts facts. Untrustworthy. Right. What's the quote-unquote report? Pentagon on Tuesday released its latest edition of the capabilities of the Chinese military, reportedly claiming the Chinese military is in the midst of a historic buildup that has made the U.S. homeland increasingly vulnerable. Oh, now that's interesting. Let me go see merely another hype about the China threat rhetoric. I mean, that's exactly what Trump has been promoting every time he ran. It's like, well, the Chinese... congressionally mandated. That's why he originally threatened to impose sanctions on them back when he was campaigning. Congressionally mandated report describes a Chinese military that is increasingly sophisticated and resilient. Yeah, but this is also not untrue. Like, that's fine. Hyping Taiwan question about China's partnership with Russia. I mean, that's also fair. That's exactly what's going on. They are supplying Russia weapons. Well, supposedly just components, but, you know, there are plenty of leaked reports that China's also supplying munitions to Russia. Pentagon report is speculative. It distorts the facts. In response, the Reuters report Monday cited the draft Pentagon report claiming that China is likely to have floated more than 100 ICBMs across its 3 silos. The report claimed that China also has no desire for arms talks. I heard the U.S. is getting new battleships. Yeah, I heard that as well. Gonna need a lot of metal. Let's go. Yes. Alright. U.S. nuclear superpower. Okay. Alright. So, not much here. Yeah, it's been a little quiet on the Netflix front. I know Ellison's trying to, personally guarantee it, but I don't think they want to sell to Paramount. You know, Warner Brothers has been advocating they sell to, that shareholders approve a sale to Netflix. I think Netflix is brilliant for doing it. Changes their balance sheet a bit, unfortunately. All right, so what else? Thin trading, U.S. rare earth buyers, fine. Okay. Fed should lower rates if the market does well, Trump says. Yes. Yeah, that's right. He made a post about essentially how, you know, he's not going to pick a Fed chair unless they drop rates. What we already knew that, and I think that's why Waller's coming out going, "Oh yeah, we could be a whole 1% lower or whatever." All right, so that's not a surprise. Can Netflix save the American wall? We looked at that last week. It's actually a brilliant strategy, I think. Okay, all right. Let's go do. Let's pop open like the journal here. Let's go to Wall Street Journal. Let's see what they've got. All right. So, end of year sale. Yay. Why am I not signed in? America's economy keeps powering ahead. Right. The GDP numbers were good. There were a lot of revisions in them, in fairness, from the summer. Are we in a productivity boom? That's probably more interesting. Whoever the next Fed chair is, they won't be independent. Yeah. Let's log in here really quick. Okay. No, I don't think it's naive to think that there are political motivations between this Netflix deal. I mean, the fact that Kushner was backing the competing bid against Netflix and then he dropped out, that's all you need to know about the Trump administration, like, green lighting this. Like, that's all you need to know. It's gonna happen, you know? Okay, let me see this here. So, third quarter. Company has been marked this year a rising stock market, slowing labor market. Could the explanation be a productivity boom led by AI? That seems possible given by the 4.3% GDP report. The report, delayed by the shutdown, came in well above most forecasts. Consumer confidence is down in surveys, but you wouldn't know it from the 2.4 percentage point contribution to third quarter GDP. Healthcare, prescription drugs, international travel were leading contributors. Healthcare accounting for a third of the increase. Is it an Ozempic boom? Because people might be willing to travel. Okay, I get it. Airlines reported wealthier customers are traveling more abroad. Buoyant stock market lifted by AI may make them feel richer. If your stock portfolio is up 20% over the year, why not holiday in Rome? Sure. One concern is spending is uneven, with many companies pulled them back. Yeah, General Mills said that consumers earning less than $100K a year are buying more food at price promotions. Wow, for cereal. Chipotle in October reported a slowdown. Well, if you notice, you're actually seeing the retail stocks falling again. Let's go take a look at them. So the Qs are slow slogging up. That's no surprise. But look at this. Go to like Dave & Buster's, for example. So they started recovering around Thanksgiving, about a week before Thanksgiving. And now they're giving all of that up. And it's not just Dave & Buster's. Target sort of giving up that 100 price it just hit. I think Fun's another one. And then what about Best Buy? Yeah, Best Buy just keeps bleeding. I think Best Buy's got a 5% dividend too. And it makes me wonder, like, an established company like Best Buy paying out a 5.4% dividend is not because they intended to pay out a 5% dividend, it's because their stock has fallen this much. It's kind of wild. This retail basket is very interesting to me. Nike, yeah. Nike's another example. I mean, we're talking COVID levels here, which that's wild. Oh yeah, and let's throw some restaurants in here. So CMG, they're still trying to recover. How's Celsius? 44. Oh, they've had a nice little rally up to 66 there. Look at that. That's nice from February. They've really come down a lot and then recovered. There's a double from February. That's still nice. But I mean, it's been a ride for some of the hodlers. I mean, this thing was a $90 stock there during peak hype. The pricing power is always the question with a company like that. But anyway, another concern is inflation. The core PCE rose 2.9. Disposable income rose 2.8. Savings rate fell. Let's go take a look at the savings rate. Same with Fred. Savings rate. Personal savings rate. Oh yeah, Red Robin's another one. Red Robin. Gourmet burgers. They're at $4.20. Cheap. That company's so cheap right now because their market cap's $76 million. $76 million. It's actually really incredible. So, Kevin, important question. If we happen to go into recession, is it a guarantee that gold will continue to increase? No, it's not. I think that's the problem is, gold can go down in a recession. It has before. But then gold comes back when you start money printing. So, I get why people find it desirable because the idea is even if it goes down in a recession, because everything goes down in a recession, what comes back first? Yeah, I mean, if we're printing our way out of it, gold could be one of those. So where are we on the savings rate? 4.7%. Let's just zoom in like last 30 years here. So we were lower, much lower actually over here. 2005, 6. I don't think there's anything really to see here. All right, so declines in imports, business investment, blah, blah, blah. Trumponomics, okay, fine. They didn't answer the question. Okay. Whatever. That was boring. Okay. Let's see here. DOJ, voter data fine. Trying to make us fall in love with Disney again. Yeah, they got some work to do. I'm optimistic for them. I think they have just massive pricing power of a brand. You go to Disney World or whatever with kids, people just blow money on this. But, they should double down on more parks and more kid-friendly brands. Let's see here. What else? How to make your economy a Class C a little less miserable. Okay. I feel like that article has been there for like 2 months. Okay, that's boring. Let's see here. Yeah, there's not much right now. I mean, it is Christmas Eve after all. Selensky opens, way to demilitarize zone. Fine. Chasing an economic boom. White House dismisses risk of AI. Right. Well, that's part, Sachs is doing. Downplaying. They're looking for their own reporting that suggests, oh no, like AI is actually creating jobs, not deleting jobs. And I think that's a little loony, but and probably cherry picking data. Probably a little bit like what they're doing with the vaccine stuff, but, that might be a topic for a different video. Do you think social media or AI has opened the eyes of the retailer because basically the retailer figured out most stuff they're buying is complete garbage? Maybe. Oh, you mean like individual people? But no, I think people like to buy stuff. So, Kroger, $2 billion stock repurchase. Healthy balance sheet, favorite topic. I do like the balance sheet. The problem with Kroger is they've got net margins of like 1.9%. I'm like, talk about no pricing power. I like high margin businesses. I like margin. Sachs said their goal for next year is to shift the narrative on AI to a more positive one. Well, yeah, they're kind of saying the quiet part out loud. There's here, let me explain what I mean with that. So, the Trump admin says the quiet part out loud. Okay, so Myron, who's a Trump shill, and still employed by Trump admin while at Fed, right? While duly at Fed. And I don't dislike him, I actually think he has good arguments. He says, says the goal of the Fed is to forestall a recession as long as possible, right? Trump says, why kill the rally? Lower rates, inflation will take care of itself. Meanwhile, the data rigging, is highly questionable, right? Now you've got Sachs, arguing AI actually creates jobs. So lower rates to keep the boom going. This is, I think this is, I hate to say it. I hope they're right, but I can't help but feel these are people financially incentivized to lie or cheat to get even richer or to make their friends richer, and they'd rather do that than be honest. That's just my take. So I hope I'm wrong. There's nothing about this administration that says, oh, I can trust them. And I'm not saying other administrations are better, but I'm just saying this is a whole new level of rigging that we're starting to see. It's all right. So then it's then you really look closer at the labor market because it's sort of the last thing you got. And then it's oh, well, that isn't good. Look at the ADP Weekly, for what it's worth. ADP Weekly just came out yesterday at 11.5K. That aligns with Powell's, 40K to negative 20K assertion so far. So we'll see. Yeah. In part, the whole gold and silver rush, I feel is a little bit of almost a canary. But anyway, it was early November. What is this? Stock market had grown jittery. Early November, stock market had grown jittery as investors recoiled over enormous bets on AI, but the skittishness playing out on Wall Street barely registered at the White House. Asked whether it harbor any fears about an emerging bubble. Trump says, no, I love AI. Trump loves anything that makes him look good. That's why he became the crypto president, because it's hey, Trump's for sale. But anyway, he doesn't actually care about Bitcoin. Well, whatever. For Trump, there's no risk, only reward posed by the dawning of a disruptive age. Of course. Yeah, I totally agree with this. Optimism was on display after the government report, Kevin Hassett, the boom of AI, blah, blah, blah. Administration's unqualified support contrasts starkly with a more cautious tone struck by economists and even some technologists in Silicon Valley. Still, many question whether AI might cause significant job loss, at least temporarily. White House largely waved off those concerns and said instead Trump, who's long viewed the stock market as a barometer of his success, has courted and celebrated soaring stock prices. Let's see here. Generative AI, potential game changer for productivity, Council of Economic Advisors. But he said that was not to suggest there was no economic political constraint, blah, blah, blah. Let's see here. Mass layoffs or a great coach. Policymakers across White House generally agree that AI portends generational change. Though through a series of executive orders, Trump has moved against others like China. Okay, we get it. For now, economic data reflect no mass firings, but a growing body of research still hints at the ways technology may reshape the labor force, particularly for lower or younger Americans. One study from the Federal Reserve found companies embracing AI had mostly opted to retain their workers rather than let people go, which is positive. More striking, however, was the slow rate at which these companies were hiring new workers. Right. That's the problem. That's why they say low hire, low fire. 25% of respondents said they plan to reduce hiring in the next 6 months, especially for college-educated positions. Right. Let's go look at Sachs's argument. Sachs. What? David Sachs of SH9T. Sachs. Okay. Let's go see. Because I know he's weaning on about this. Let's see here. So, he just tweets so much. Let's see. That's all on GDP shilling. I've got to see the AI jobs thing. Maybe I could just try the search for it. Well, jobs. It was just within the last week. The problem is oh, there it is. AI job loss hoax exposed. According to a new study from Vanguard. Occupation is exposed to AI automation or outperforming the rest of the labor market in terms of growth. Well, let's go actually see this. So, I want to see this. This is, let's go to Vanguard AI job growth. Because he didn't link the article. Here it is. Okay, so Sachs. Artificial intelligence could reshape the economy. AI investment may lead to stronger than expected growth. Stabilize. This could this is a downstream effect. They're basically saying if AI stabilizes the economy, well, then people will start hiring again because the economy will be more stable. Okay, that's not exactly saying that AI today is creating jobs. It's basically saying, oh, if the AI bubble keeps going, the economy will do well and people have more money to hire people. That's at least from that headline here. Read the transcript. Yes, please. Okay. Where are the sheets? Like, where did they get these charts from? That's what I want to see. Maybe it's in here. This looks correct. Okay. Jobs. Now let's find jobs. Jobs? No. Job growth. Oh, here we go. Okay, great. Let's download this. Okay. So Vanguard AI impact. 1224. We'll look at this together here. Pop this open so we can actually get the context. Okay. Okay. So job. Where was it? Uneven pace, job. Okay. Automation fears outpace the labor market reality. Okay. So let's see what this is. While AI may have started to change our workflows, its role in explaining recent slowdown in job growth is overstated. Right. For now. Right? For now. Like Fed study says, hiring intentions are down due to AI, not firing up, which is interesting. Specific have faced job losses, which is common. However, if AI were causing widespread job cuts, that would appear, there are no job cuts yet. That's the thing. No job cuts yet. That's what everyone's waiting for. Now, the question is, is Vanguard saying, because there haven't been job cuts yet, AI must not be having an impact? If that's their premise, I already disagree with that. So I don't know. We're going to see. If Vanguard is saying, because we haven't seen jobs off a cliff yet, AI isn't having an impact. To me, this would be a substantial jump to conclusion way too early in the cycle. If that's the depth of their research, it's actually pretty bad. But let's see what they say. If AI, that would appear, well, not yet. Look at hiring intentions. Okay. It said approximately 100 occupations mostly exposed to AI are outperforming the rest of the market and labor market in terms of job growth. So let's see. This suggests that current AI systems are generally enhancing worker productivity. We'll see. Meanwhile, entry-level employment challenges reflect disproportionate burden that a labor market with a low hiring rate, okay, yeah, here it is, can have on younger workers. This dynamic is observed across all occupations, even those unaffected by AI. Sure. While statistics abound about large language models, beating computers, blah, 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 statistics are nuanced, significant progress is needed before we see wider and measurable disruption. Right. Okay. So basically, this is interesting. LLMs need more progress to see wider disruption, they argue. And then let me see. This is the occupations with AI exposure, annualized growth rate, data undercut dire projections. I think it's too early to say this, but that's okay. Let's try to understand this. Job growth. Is this wage growth? This is wage growth. This is wage growth. This is job growth. Job growth, occupations with high, so what are some of these? Represents 140, because the question is, like what jobs are they looking at? Of course, tech, data centers, finance, etc. are booming when stock markets are high. So there's also the question of, is hiring up in, or is not firing happening because the stock market is up, enabling the lack of firing at those richer companies, right? That's an idea. I don't know. I don't know the answer to that. 140 occupations with the highest share of working hours that current AI systems could automate with human supervision. Adjustment. I'd love to see what jobs those are. Occupations with high AI exposure. And then they go, that's it. That's it? That's not even this is like commentary. That's not a study. This is commentary. Interesting. Okay. So let's try to find these 140 occupations. Maybe this is like a widely, it could be like a circulated report that they're referencing here. So occupations with high AI exposure, Vanguard, 140. Let's go find them. Let's see here. Where are they? Occupations with high AI data. Well, I'd like to see them. Occupational, Federal Reserve Bank. Occupations in high. Okay, here we go. High. Let me put exposure. Okay. Here we go. Median AI exposure categories. All. Oh, they didn't clean this up here. So they sort of ranked your exposure. Management, financial operations, computer, math, got it. Okay, yeah, as you would expect. So AI, it's helpful to keep in mind that AI exposure does not necessarily measure susceptibility to job loss. As we discussed earlier, there are several factors that will determine the labor market outcome by occupation, such as changes in expertise requirements and the level of labor substitutability versus complementary AI. Median. See, this is already much more nuanced. Oh, here it is. ONET and the Bureau of Labor Statistics. So they do the scoring. Let's download this piece. Philly Fed. Philly Fed on AI job loss. 1224. Because Vanguard gave you a little one-pager. The Philly Fed has this. I mean, what is this? This is a 19-page document. Okay, so it's helpful to keep in mind, AI exposure does not necessarily measure susceptibility to job loss. And that has to do with changes in expertise requirements. That's how you basically hire fewer, right? So essentially saying, again, low hire. essentially low hire. Okay. AI exposure measure, blah, blah, blah. Highest AI exposures appear concentrated. Highest AI exposures appear concentrated in math and computers. Right, but these are also propped up by the stock market. So it kind of makes sense that like those businesses don't have to fire yet. Measuring these categories, median AI exposure tends to be higher for occupations typically requiring a bachelor's degree. Let's write it like that. There we go. Lowest AI exposure are going to be things in production: forestry, farming, fishing, maintenance, installation, repair. Makes sense. Median income for each of these occupations. Let's see here. All these occupations, blah, blah, blah. AI exposed. Okay, fine. So AI exposure by education level. Okay. High AI exposure. We proceed by defining AI exposed occupations as the top 25% of AI exposure. We clarify that the risk of these occupations could be positive or negative. Positive risk indicates increasing productivity and wage growth. Negative risk might be associated with diminishing job opportunities via automation, right? Okay. The three most common AI occupations: office clerks, customer service reps, and admin assistants, which tend to have lower pay. However, several high-paying positions, like accountants, lawyers, sales managers, these are all just little examples. So those are the high exposed. These are the low exposed. Okay. Overall, AI exposed occupations, see figure A1, blah, blah, blah. Let's see. Okay, fine. So we talk about exposure. Calculate the share of AI exposed by dividing. This is all just their methodology. That's fine. I'd just like to see some more commentary. White and female workers are most at risk to AI. Well, that's interesting. 25% of occupations held by white workers are AI exposed, higher than 24% for AI or for Asian, 19% for Black, 16% for Hispanic. Okay. Implications. Okay, let's see what they say here. Disproportionately impact lower wage and lower skilled. Our results suggest that Gen AI will likely impact those on the upper end of the wage spectrum. In further contrast with the findings of a previous automation report, we observe that the metro areas will be more impacted by Gen AI in less population-dense metros. Will be more impacted by Gen AI than sure, this is just about certain locations. That's fine. Maybe some downstream effects of Gen AI in the labor market. Let's see here. AI manufacturing, blah, blah, blah. Deindustrialization. AI adoption tends to be more labor substituting. If AI, see, it's too early to say is what they're saying. If AI adoption tends to be more labor substituting than complementing for highly educated occupations, demand for post-secondary education may decline. Basically, the need to go to college declines. And more affordable, lower exposed metro areas may become more desirable. Fair. Recent research suggests that Gen AI has already impacted the labor market for graduates in occupations with high 2025, another study finds that early career workers in occupations with high AI exposure, this is early career workers, have experienced a 13% relative decline in employment, while more experienced have seen no change. So you're seeing the impact. You're just seeing it slowly. Seeing impact just slowly. And in my opinion, stock market wealth prevents the firing. Prevents the firing that may otherwise occur. Like, if companies actually really had to tighten their belts. Exposure to Gen AI may pose threats to current and future workers through automation. There are reasons to be optimistic. Good. Okay. Labor exposed, increasing employment and wages following GPT. Okay, so look at this. So this is positive. So this here says that highly AI-exposed sectors experience increases in employment and wages following GPT's introduction, and that only those in which AI could directly substitute human labor saw declines. That's the other thing. It's like, where can, in other words, where can AI do the full human job? Maybe customer service, like centers, like customer or tech support, right? Like you could probably have AI do that entire job. That's certainly for the lower levels. And then in that case, those companies can actually grow faster. So that's good. Additionally, authors suggest that, so only where there was a direct... So that's interesting. But it also then begs the question, if AI only kills jobs when it's good enough to do the full job, is AI good enough? Is it overhyped then, right? Then you sort of like go back to this other argument. That's quite interesting. Interesting. All right, we're almost done with this one. We'll go on to something else here. It'll be crucial for community stakeholders to stay connected, blah, blah, blah. Any disruptions to regional labor market will necessitate a role for job retraining. Fine. AI could rebuild middle-skill jobs in the U.S. that were previously eliminated by globalization. That's interesting. Extending the reach of human expertise. Oh, well, we'll see. But to me, none of these things are, a lot of this to me is like not, how should I put it? I don't want to race to, I think it's way too soon, a bottom line. I am way too soon to make conclusions. See what happens over time. But if firing ramps up, to me it seems logical. It seems logical that if companies have to tighten their belts, which they don't with the stock market at all-time highs, then job loss will come. Then job loss can be delayed, we'll say. Can be delayed until a extended market, rut, something like that, or I'll just say, decline, a little easier. So I don't think I don't think it's as valid to go in and say, oh, for sure, AI is only creating jobs. There are arguments clearly on both sides. And nobody seems to be weighing in the fact that, the stock market is creating this insane wealth right now. And look, the slow slog is continuing. It's pretty incredible. So, yeah. Amazon has fully replaced customer service with AI already. I mean, I think there's so much a good AI bot can do. I don't know where it was, but I called... I think I called a certain hotel chain, and they're like, I'm like, hey, I want to look up a reservation. And they're like, sure. What's the reservation name under? Then I'm like Kevin Paffrath, and then I spelled out my name, Paffrath, and then I thought it was hilarious because the bot actually understood it, and I'm like, this is great. If I was dealing with a pre-AI bot, they would never understand my last name. I'd be sitting there trying to type it in on the phone or something, which that's a pain in the butt. It'd be horrible. There'd be no way. So it's actually pretty impressive. And I think you could probably do a lot with AI customer service. It's kind of cool. Okay. Cool. What else? So that's Sachs. So he makes this argument, without I feel like that's the missing piece. It's not it's not really a study from Vanguard. It's actually, I don't know where they're getting it from. AI impact. This is simply looking at the annualized growth rate over what period of time. Yeah, I mean, but look at the stock market between this period, right? So let's look at that. That'll be very interesting. So let's do 2020. Let's do S&P 500 stock. Okay. So let's go to what was it? 2015 to 2019. So we'll just ballpark this. It doesn't have to be exactly perfect. So between 20, why can't I get this a little more fine? Oh, there, okay. 2015 to the end of 2019, okay? The stock market was up 59% over 15, 16, 17, 18, 19. 5 years. 5 years to get 59%. Why don't they do this? I don't know why they don't do this. 5 years for 59% on S&P 500, okay? Look at that. So you put this right here, okay? And then, of course, the AI sectors are booming if the stock market's booming, right? So this is only 2 years. So in 2 years since GPT, this is going to be ridiculous. 2 years since GPT, so we have to go to Q2. So Q2 starts right here, April 6th. And then we're going to go to 2025 Q2, which is going to be Q2 beginning to end would be, what would that be, like July? No. Q2, yeah, the beginning of July. Yeah, so roughly the same, right? 52, 53-ish percent. So about 52% in 2 years. So you kind of have to factor that in for 52%. I mean, that's remarkable. So, to me, the stock market, especially in AI-exposed companies, which are more likely to benefit from the AI stock market rally, right? I mean, that makes sense. Anything AI gets propped up in the stock market. Stock market, especially in AI-exposed companies, which are more likely to benefit from the AI stock market rally, gained substantial wealth much faster. So, you know, comparing these two periods of time without considering the stock market seems insane to me, especially since companies spend or cut in part based on their stock performance. You know, when stocks are plummeting, CEOs cut and try to be disciplined. When stocks are skyrocketing, they don't have to be. You know, they could be lazy about cutting. So, all right. That's my take. I think it's a good take. But that's the problem is like, and you know, that takes like 20 minutes or 30 minutes or whatever to talk about. And David Sachs posts one, you know, little screenshot here. And, yeah, kind of wild. Anyway, okay, I'm glad I looked at that because I know a lot of people were talking about that. It just took a while to take it apart. All right, so then we actually go back to where we were, which is here. AI reduces employment for younger folks, right? Less experience, blah, blah, blah. Hassett rejects the idea about mass job losses. Of course, they're kind of sticking their heads in the sand. AI affects employment. Lisa Cook said AI could have a positive effect on combating inflation. Oh, I do think so. I think you can actually see, yeah, either productivity or disinflation or both. Okay. Let's see. Watching this closely. New disruptions take time. Benefits take time. This is true. It's always easier to see jobs that are likely to disappear, but hard to see new ones that will be created. Of course. That's Waller's take. All right. In the near term, there's a lot of froth in AI. We know that. We talk about the debt problem. Okay. Risk of a bubble in policy, backstop, no federal bailout for AI. Right. Yeah, in the meantime, the Fed's already injecting liquidity, right? AI is too big to fail, so it's really important that the government learn the lessons of past bubbles. Well, who said that? But Mr. West said that. Mr. West, this is a Brookings Institute. Unrealistic for the government to do nothing if the technology falters. If the debt-laden data centers sit unused, tech companies see staggering shortfalls. It could snowball from a minor crisis to a major crisis. Yeah, I agree with that. Trump has spent much of his time juicing the AI market. AI is too big to fail. It's really important that the government learn from the past bubbles. We don't know if we're in a bubble because no one knows until it's too late. But there are certainly many warning signs out there. Yeah. Kind of interesting. Okay. Well, the queues keep going today. This is great. So you've got, let's see here. Oracle's got about 1%. What's driving the queues today? Oracle, I've got AMD's only up about 17 bips. Where is NVIDIA? Where are you? Where are you? Yeah, somewhat of a recovery. How's Meta? 666. It's been there forever. Microsoft. Yeah. All the big boys. Oh, yeah. All right. Okay. So we looked at personal savings. What else? Okay, let's go jump into zero for a moment. So if I go to zero hedge, let's see what we have over here. Goldman, Tennessee, Tim Cook. Tim Cook buys Nike stock? What? Let me see here. Yeah, new insider filings. This I feel like is just like trying to send a signal. Cook made a second purchase of Nike, buying $2.9 million worth at an average price of $58. Wow, there he is with his Nike kicks. Cook owns 100,000 shares and has been on a buying spree in a 4-year bear market. Wow. He's been buying shares since 2014. Oh, interesting. Okay. Soaring memory costs sink Nintendo shares. Huh. Greta arrested again? I feel like that's almost just become like an entertainment kick for her. It's like, oh yeah, I'm gonna go get arrested again. New AI Nike. New AI Nike shoes powered by Apple. Yeah, maybe they could be powered by Siri. Tesla faces new niche probe over the door handles. Yeah, there's been a lot about that. Okay. How's The Economist doing? Let's go take a look at The Economist. Oh, to be on the board, you have to buy shares? Oh, that's interesting. Nike. MAGA is eating itself. Okay. That's interesting. The Uyghurs. Fewer Americans are giving. That's unfortunate. Americans usually turn charitable, but it seems fewer of them will give away money in 2025. Donations fell about 3%. Share of households worth more. Wow. Giving. All right. Okay, well, I'm going to pull up the Myron clip. So, let's go Myron. Okay. This is that part. No. Where was the clip? Myron recession. This is just forestall the recession. Yeah, there we go. Okay. So, okay. Let's talk about that. And then I will pull it to headphones. And then we can do a little bit of a summary of all the stuff that's going on out there. Okay. Let's see. Slow news day on Christmas Eve. Time to boot up Rust. I know, right? That'd be fun. Okie dokie. Okay. Let's recap. Let's just go over here. We'll recap some of all this stuff we've gone through. And let's go pop open the Myron piece. As well as we'll do a little recap on some of the OpenAI stuff. That'll naturally loop in from the Vanguard piece. So we'll talk about that. Yeah, I think that'll be a good summary. Okay, cool. Let's summarize it all. Well, the Federal Reserve and the White House together are now saying the quiet part out loud. This is Mr. Myron, the shill who also still works with the White House, which is very odd to have somebody working in the administration also working at the Federal Reserve. Now, I like him, so don't get me wrong by me calling him a shill, but let's be real, he's there to, tell you exactly what's on Trump's mind. We saw Donald Trump's Truth Social post yesterday arguing that inflation will take care of itself, and we just need to keep lowering rates because we don't want to kill the rally. Myron and Sachs both add fuel to this fire, and so they're saying the quiet part out loud. But what does Myron say about recession? Let's start here. This is about a 1-minute clip. It was about a 1-minute clip, the piece that I wanted to show. Myron talks about specifically recession and what the White House and the Fed's job is when it comes to recession. So we're going to jump to that segment if I can find it here. Okay, here we go. It is about 2 minutes into the segment, and let's listen to this, and we'll springboard from there after about a minute of Myron.
And I think it's somewhat problematic if you see those data coming out and you don't adjust your policy prescriptions in a dovish direction. What does that say about the reactiveness of policy to the economy? I think it reflects very poorly upon the institution.
At the end of that speech at Columbia, you nodded to the fact that recessions are inevitable. Fed's job is to kind of forestall them as much as they can. Policymakers' jobs are that. I'm very curious, when you look at the labor market in particular, the rise that we've seen in the unemployment rate, that's kind of rise we've seen customarily before recessions. How do you assess the risk of there being a recession here in the near term when you look at the labor market, for instance?
So, by the way, I love the quote right there, and I think that's a really important quote that you want to think about. You said at the end of your speech that the job of the Fed is to forestall a recession. Mind you, that aligns exactly with Donald Trump. Why kill the rally now? And it aligns perfectly with what David Sachs is saying of, AI is actually creating jobs. It's not destroying jobs. The whole narrative is to make sure that we can keep pumping stocks. And that's actually bullish in the short term because it's exactly what's happening. You've got Oracle CDSs coming down, so you've got some fear finally coming out of that Oracle, credit default swap market, suggesting maybe we're starting to see some calming. Hopefully that continues. My bet, and what we've been talking about in the Alpha Report and the course member live streams, which you could join at mekevin.com and get lifetime access for, my bet is that we just continue to slow slog until January 9th. That's what we said this morning. We're like, hey, there's no reason the slow slog doesn't continue. And when you've got now members of the Fed, Dave Sachs, and Trump all pushing for, why kill the rally? Keep bailing out the market. Just kick the can down the road of recession. You don't really have bearish near-term catalysts. Obviously, until the labor market actually rolls off a cliff, but that hasn't started yet. Let's listen to Myron here, though.
I don't see a recession in the near term, in part because we are adjusting our policy rate by lowering it, which is appropriate.
In other words, no recession because we're cutting. So we got to keep going. Okay.
My view, as I've described, is that a variety of shocks that hit the economy, including changes to the population growth rate due to changes in the border policy, have pushed what we call the neutral rate down, and that policy needs to adjust downward to reflect that downward shift in neutral. If we don't adjust policy down, then I think that we do run risks of rising recessions.
This is essentially saying if we now stay, frozen at this interest rate, then we start increasing the risk of a recession. So what's that quiet part? The quiet part is, hey, let's do whatever we can to keep the economy propped up, which again, bullish short term, but at some point the price gets paid. Now we'll talk about OpenAI in just a moment, especially following up on David Sachs's jobs argument, but let's listen to a little bit more of Myron here.
Don't think it's too late to prevent that. And so I think it's important that we keep on adjusting our policy rate down. But at the moment, it's not my base case, in part because I think that we ultimately will end up continuing to adjust interest rates down.
I want to ask you about
ultimately will end up. So in other words, Myron's base case is, hey, you might have people at the Fed who say, we don't need to cut right now. But his base case turns into, oh, no, I'm not really worried about it because we'll just keep cutting. This is why I think certainly by 2032, this is my belief, we'll see interest rates back at probably the lower bound, 0, whether there's a shock or a recession or we just see inflation turn into outright deflation. But there's a lot for us to break down here. So David Sachs, so we've got Donald Trump, obviously, with his Truth Social post, why kill the rally? Just keep cutting rates. Inflation will take care of itself. Myron saying we need to forestall a recession as long as possible. Let's just keep cutting so that, we can kick that can down the road, even though we know recessions eventually will happen. Okay. It wouldn't surprise me at all that people in the Trump administration believe, hey, if we could just kick the can of recession down to like 2029, let's do that. Because why have the blood on our hands? On one hand, you kind of can't blame it, but on the other hand, you also can't help but look and say do we, not that we trusted the data before, but how much can we really trust some of the blatant rigging that's happening right now in the data? For example, missing CPI. I mean, how much of the CPI report was missing? And all of a sudden, we're supposed to believe that we're cheering this incredible CPI report? And how much of the jobs data was missing? Anyway, this is where, Powell is, I think, right to say, remember the pace we're on. If they're telling us 40K jobs created, which we just had a weekly data set yesterday that came out from ADP that said we're growing at about 11,500 jobs per week, which roughly aligns with a little over 40,000, then we're actually at negative 20K. So we're actually shrinking. And Powell made it very clear in his last presser that would be, quote, well below the break-even level. And so in other words, the labor market side is deteriorating. But how does that then reconcile with this sort of no, man, keep breathing life into the bubble from David Sachs? Because David Sachs, says AI job loss hoax exposed. And this is very classic Twitter X. This is like, people leave me these comments like, Kevin, why can't you just do your videos in 2 minutes? Why are your videos always so long? This is like that same loser mentality that just wants to scroll on X and get their little zingers or whatever, and you lose all the perspective, which I think is very important. So let me show you in a summaried way how you could break this down. So David Sachs says, according to a new study from Vanguard, occupations most exposed to AI are outperforming the rest of the labor market in terms of job growth and real wages. So let's just take this at face value for a moment. First of all, I wouldn't call this a study. This is more of a report. I'm actually going to show you the report in just a moment. But let's just take this at face value and say, okay, occupations most exposed to AI, more jobs. Okay, so we simplify that. So first of all, what are occupations exposed or with AI exposure? There are going to be things in, according to at least the Philly Fed, there are going to be things like middle management, upper management, accounting, customer service, lawyer work, basically anything in the finance space. And they've got a whole sheet of this, which I think is very interesting. Look at this. You have to look at this AI exposure piece right here. And they take the top 30% of these rankings and say those are going to be the most exposed. Office clerks, customer service secretaries, frontline supervisors, accountants, auditors, receptionists, sales representatives, lawyers are in here, HR, market research, computer systems managers, analysts, whatever, insurance, compliance, of course. Okay, but there's something that all of these have in common when it comes to jobs. And so Dave Sachs references this piece right here. He argues that, see, look, we actually have more jobs being created after the GPT moment than before. And basically what Vanguard did is in their report, they analyzed, okay, well, what was the job trend between 2015 and 2019? That is a 5-year period. They're calling the pre-COVID trend. 15, 16, 17, 18, 19, 5-year period. Post-COVID, they're only measuring from the second quarter of 2023, so the GPT moment, to the second quarter of 2025. So, through, call it June 30th of 2025. And so what we did is we looked at the S&P 500, not even the NASDAQ. It'd be even nastier if you did this with the NASDAQ. This is just the S&P 500. And I think this is really important because if it is true, which we'll believe it, that there's job growth occurring in the AI exposed sectors, you got to ask yourself, anything that's been labeled AI, like even loser companies like C3 AI, just because it has the ticker symbol AI, they've been doing really well. Well, I don't know. I haven't looked at the C3 AI stock, but anything labeling AI has gone through at least some period of a boom over the last few years. And the boom in stock market wealth, in my opinion, creates and enables the opportunity to hire, which I evidence this by looking at how rapidly the market has grown compared to pre-COVID. So look at this. In the 5 years pre-COVID, you had a 59% growth in the S&P 500 over those 5 years. So, what is that on average? Like 10, 11-ish percent or whatever compounded. Who cares, right? But look at this. In the 2 years from the GPT moment, the S&P 500 is up 52%. So you've actually had the market accelerate or move, what is that, 2.5 times faster. So we've generated wealth in the stock market 2.5 times faster starting at that AI moment than the pre-COVID market. And so in my opinion, what a surprise. Companies that would potentially have AI exposure see their stock wealth go up and therefore they hire more. I don't necessarily think that you can argue that AI is creating jobs. I think logically that's a fallacy. And I don't think that nuance you can really get from Dave Sachs' post. Now, the Philly Fed actually gives a little bit of nuance. See, the Philly Fed here, they go in to say this. It's also, they don't mention the stock market either. That's my opinion. My opinion is the stock market has a lot to do with the hiring. And if the stock market goes into a weaker period, that's when you actually see the hiring cliff. That's why we haven't seen the massive layoffs yet, because the stock market keeps getting pumped up. So it's kind of circular, right? Stock market pumped up, hiring stays up, stock market pump up, hiring stays up. It's circular until something breaks, which is good. That's bullish in the near term, right? It just does mean the risks are growing, and we'll talk about those risks with OpenAI in just a moment. But take a look at this. It's helpful to keep in mind that AI exposure does not necessarily mean susceptibility to job loss. As we discussed earlier, there are several factors that will determine the labor market outcomes by occupation, such as expertise requirements or the ability to substitute workers with AI. They make the argument that if you can fully substitute a worker with AI, you're definitely going to see job loss. There's no question of that. But if it's more of a productivity enhancer, great, then you're not going to see job loss in those sectors. Fine. That's why I personally throw in the stock market. And I say that's probably the biggest guide for the labor market. This, by the way, is the citation for that. So they say that, which is also an irony that kind of leads us into the OpenAI piece. But watch this. They say that highly exposed AI sectors experience increases in employment and wages following GPT's introduction, and only those in which AI could directly substitute human labor saw declines. That's per one particular study. Okay, fine. This, again, could be because of the stock market, but somebody hasn't done a study on that. That's just sort of my, I'm trying to understand or rationalize, why could this be? Stock market wealth effect could be a really good reason. I think we could probably all agree on that. But this is very interesting because they do then, beg this question that if AI only kills jobs when it's good enough to do the full job, then is the current level of AI overhyped, right? Because if it's only killing some jobs because it's not good enough to kill more jobs, then have we overhyped Sam Altman? And that's where things get really interesting. I wrote a few things down. You can get this for free over at the Meet Kevin app, so I'll show you this. I wrote a few things down about OpenAI and their desire to start running ads. And I thought this was interesting because I see that as really risky. If you run ads, you might kill user trust. And the thing is, they realize that as well. But what was remarkable to me was that OpenAI expects to make, take a look at this, OpenAI expects to make $2 per year from free users. $2 per year, that's it. You know, what is that per month? 2 divided by 30. That's $2 divided by 12. 16 to 17 cents per user per month on non-paying users. And I find this really remarkable because it means that your $200 a month client who might have been an early AI adopter probably really propped up the AI initial revenue projections. And I wouldn't be surprised if now you're seeing OpenAI panic a little bit because you're not seeing those $200 a month users anymore. So now they're like, all right, let's start making projections, assuming that we're going to make $2 per user off non-paying users via ads. But then the question is, what happens when LLMs are essentially ubiquitous? Now the ads are everywhere. That revenue per user could actually decline. In fact, if we look at their projections, they projected this summer that they would make around $110 billion in revenue from non-paying users through 2030. Problem with this is, when we did the math on this, 110 billion divided by the next 5 years suggests that on average per year, if you assume 700 million users, they're forecasting $31 a year. So in one breath, they're expecting roughly $31 per year from a user on average every year for the next 5 years, which is crazy because that would be 31, 31, 31, 31, and 31. But now insiders are actually saying they're actually thinking they're only going to end up getting $2 a year and then maybe $4 a year, $6 a year, $7 a year, all the way up to $15 a year by 2030. So to me, that makes me nervous that the projections are way, way off. And I don't think any of us really needed more Sam Altman is Scam Altman insight, but that is a little nerve-wracking. Another thing that was a little nerve-wracking, but I think we kind of knew this already, is The Information did this really interesting report where they looked at these Hong Kong IPOs that are coming up. And so because they're going public, they broke open their financials for their LLMs. And they looked at the Minimax IPO coming up in Hong Kong. They said the company's got just 15 months of cash left and that there are 2 different margin profiles that these companies have. And this I thought was really fascinating. So they make the argument that on general chatbot crap, which is the vast majority of yapping that people do with chatbots, the general chatbot stuff, these companies are making about a 4.7% gross margin, which is like almost at grocery store levels of horrible margins. You know, grocery stores are famous for having 2% net margins, so nominal gross margins as well. 4.7% gross is pretty bad. That's like a grocery store level margin. And it makes sense because it's there's you want to go buy your box of cereal at Publix, Winn-Dixie, Ralph's, Vaughn's, Albertsons, whatever. There are no margins in these businesses because nobody cares. It's the same thing as an LLM. You can almost say that an LLM is literally like a grocery store. Like, who's got the circular for the cheapest grapes this week? That's where we're going to go buy the grapes. I used to do that back in like 2009. I'd be like, who's got the cheapest grapes? But anyway, it's like there's no brand loyalty. Who freaking cares? So where can you get the cheapest outcome? So the LLM side, 4.7% gross margin on that Hong Kong side. Very interesting insight because it really suggests there's no pricing power there. But we already knew that. This is why Google is basically just including these in Workspace, right? For their Workspace users. Now, in specific software solutions, they indicate that gross margins are 69%. And so to me, that was great because it indicates that companies like Palantir that do niche down, they can keep cranking money. But companies that don't niche down and they try to appeal to everybody, especially free users, which in my opinion are the worst, there's no money to be made there. And that's actually a really big problem. See, GPT wants everybody. I think they're assuming that they're either going to make $31 a month from all these free users if you use 700 million as an example, or they're assuming that their revenue or their user growth is going to double or triple or something, and that's how they're going to try to make sense of this $110 billion forecast of revenue from free users over the next 5 years, which is kooky dookie in my opinion. As you saw with the math that we did, it doesn't line up, right? There's a huge problem in that math. And I think the big lesson to take away is if you want to make money in AI, you niche. Again, whether that's Palantir or who knows, a lot of people are buying our Reinvest AI product. We're also ending our fundraise. I cannot wait to end our fundraise at the end of this month. Part of the reason for that is I look at this, I go, why are we selling shares for this AI company at a real estate company valuation? We need to stop. I feel like, I shouldn't say this, but I feel like I'm giving away shares, right? It's like diluting. That's not good. So it's like we're ending the fundraise at the end of the year because we're like, we have such a niche product. You know, people were responding to me in my live stream. They're like, oh, this, yes, like that makes sense. And the pitch is, you know, every real estate agent or real estate agents who want to pay $200, $300, $400, $500, whatever it is, depending on how many clients they put into our app, can automatically send deals and automatically value them based on our custom MLs on interior pictures and our valuation, like actual real valuations, in my opinion, based on what the condition of the property actually is, not just some stupid estimate, right? That's really valuable for an agent to instantaneously send that to their clients. And we think those customers will pay us $300 to $500 a month. Now, if you do that, it's very Palantir model-esque, where the lesson is niching down is what makes the money, not the general all-purpose customer app. Anyway, this is not like a solicitation. I'm not saying, you know, go buy the Reinvest AI or go invest in HouseHack. I'm just saying, as an example, Palantir, or you could even look at a company like UiPath. UiPath is an interesting one because they're basically doing Palantir's, integration of AI. It's different, obviously. They're different services. I don't want to conflate them as the same at all. But in finance, compliance, and healthcare, which I think is one of the best niches for AI. In fact, if you look at this Philly Fed piece that we saw, a lot of what we saw in the Philly Fed piece was that the biggest disruption that could happen from AI exposed jobs would be in places like compliance. Let me see where that list was. Compliance, yeah, here, compliance officers. They had one of the highest ratings for potential AI exposure. And I totally agree with that. So I think UiPath and Palantir to some extent are opportunists in this sort of region. Again, high margin. And this is where that GPT issue becomes a problem. So how does this all, how do we tie this together? On one hand, you have Myron saying, hey, we got to keep the Ponzi going. We have to forestall a recession. It's going to happen one day, but let's kick it down the road to another administration. Trump's like, don't kill the rally. We need the wealth to stay propped up. In fairness, the wealth staying propped up probably props up the hiring, which sort of defeats, in my opinion, David Sachs' argument, because it means that the inverse is also going to be true. If we go into a down market, the job market rolls over. And then it's even worse because of AI, in which case then David Sachs' post will look foolish because he didn't account for the wealth effect. But that's okay. That's why we're making the video. So when you then combine that with knowing that Sam Altman's got this $1.4 trillion peg under the AI market, it makes sense why companies like NVIDIA, which in my opinion have a fair value at $300, are selling for a discount. They're selling at a discount, almost half of a discount here. You're at 188 to their fair value based on current growth estimates. The market is discounting how much of a weight Sam Altman has in this market. So broadly, I see all of that as short to medium term bullish. Certainly bullish between now and January 9th, because that's when we start getting our new catalysts, jobs and CPI, as much as we'll be able to trust those on the 9th and the 13th. I don't see much in the way of catalysts or like some kind of shoe dropping, if you will, over the next few weeks. But really over the next 6 months, what you want is the job market to stay propped up. Like, in spite of what Trump is saying, you kind of want him to be right. You want the stock market to stay propped up so businesses start hiring again. Get that engine going again while the plane has altitude, so to speak. It's like you lost an engine of the labor market and you're gliding. And Trump's like, light the freaking engine again. And it's like, well, yeah, light the engine. Because like, if we get it lit over the next 6 months, great. And we start hiring again, great. We can keep flying. It's not wrong. But I don't think that, making the argument that, inflation will take care of itself is a very valuable one, because the lessons of the 70s told us that was a mistake. See, Trump in his Truth Social post, he makes this argument that, inflation will take care of itself, and if it doesn't, we'll just raise rates then. That's what they tried to do in the 70s. That didn't work in the 70s, because as soon as you say we don't care about inflation, inflation expectations self-fulfill, and you actually create the very inflation you're trying to fight. So Donald Trump's messaging on inflation is actually dangerous for inflation, but that's okay. He doesn't really care about the long term. He just cares really about the next 3 years, and then he'll be out of office. So that's where I think there's kind of this, like, if there's a bubble, you've got Myron, Sachs, and Trump, who are basically paid and financially incentivized, mind you. I think them and all their cronies will do anything, whether it's cheat, rig the data, steal, or whatever, rig whatever they need to make as much money as possible for them and their cronies. That's fine. I mean, I'm not condoning it. I'm just saying we understand what's going on. I think really what it is if there's a bubble, they're just sticking a straw into it and blowing it up even bigger. And the biggest danger, I think, starts at the commoditized side. And that's where I got really interested in the NVIDIA Intel piece. NVIDIA just halted their work with Intel's 18A process. That's their supposedly like revolutionary, new fab process for advanced chips. And I think NVIDIA only invested $5 billion into Intel to shill to Trump so they could sell to China. Well, what a surprise. What a surprise. Look at this. What a surprise. NVIDIA invests $5 billion into Intel to shill to Trump and says, we'll try them out for chips. Hey, by the way, can we sell to China? Takes months to get that. Now all of a sudden, we'll let you sell, Blackwells or whatever, H200s to China, which are, so not Blackwells, but H200s to China, which are even more powerful than the H20s they used to sell. So NVIDIA got a big W there, right? What a surprise that right after NVIDIA gets this big W from the White House to sell to China, you know what? We're not actually going to use Intel. NVIDIA gets what they want, and then they stop pretending. So now this creates two potential scenarios. It either means that Intel sucks, and NVIDIA's like, this ain't going to fly. We don't want to put our name on this. Or it means that NVIDIA, this is the evil thought, NVIDIA has TSM's supply chain so on lock that they'd rather try to make Intel look bad to try to scare other people not to use Intel. And then they have to use TSM. But TSM is so on lock with NVIDIA, it then strengthens NVIDIA's moat because they have the lock on supply with TSM. If everybody thought Intel had endless supply and was equally good or better than Taiwan Semi, chip prices might plummet. So NVIDIA played some really serious 4D chess. If you think about it, like, hats off to that Jensen guy. He just played Trump. Hardcore. Yeah, Intel's great. Yeah, we'll manufacture that. Yeah. Hey, can we sell it to China? No. Okay. I put $5 billion into Intel. It's still going well over here. Can we sell to China? Okay, fine, sell to China. Cool, all right, cool, thanks. Selling to China. We're done with Intel. I don't know. Call me jaded. And so I want to be very clear about this. Where I sit on the bear bull scale, because there are always going to be people who will read a video title and then they don't listen to the context or the nuance of a video, because I get it. Like, it's hard because, oh my gosh, you have to sit there and play a 20-minute video. But it's so much easier to just scroll on a vertical feed or whatever and get the dopamine hit. But I don't think you get perspective. And I hope that when you watch these longer form videos, you're like, you can make your own thoughts and educated opinions around it all. But I think really they recognize that the only reason the labor market isn't falling off a cliff is because they're propping up the market. So do whatever we can to keep propping up the market. The Fed already started money printing. We're doing $40 billion a month of POMO, probably 26 to 52 week bills. We are doing some TOMO as needed. Those are the temporary operations. Those are more overnight, whereas POMO is, again, 26 week to 52 week. That's basically stimulus getting injected into the market. And then obviously you have the MBS rollover, which is also just going right back into the POMO, permanent market operations, for the 26 to 52 week period. It's essentially QE. So all angles, Fed, Myron, Trump, Sachs, they'll all lie to your face and say it's okay because they have to do that to keep the labor market up via the market. Which, again, bullish short term, but it doesn't change that big. It's kind of like there's a big anvil hanging over our head and like somebody's cutting the string and like Trump and Sachs are the bullies that are just like pushing the guy who's cutting the string. They keep pushing him like, no, stay back, and they keep pushing him back. Eventually the anvil is going to fall. Anyway, yes, just finish this off to be very clear. Yes, the Reinvest AI, we're going to start activating this this month. So if you bought the AI product, you'll be getting access to it this month. Happy Christmas Eve, obviously, everyone. You can get the AI product. You can learn more about what the app has and features now. But most important is this valuation AI. Once we combine that with what we have now already in our trained AI, this product, I think, will be immensely valuable, and I'm very excited about it. And that's why, if you click on the invest in the company, Househack Reinvest, same company, that's why I want to end this. But I told everybody that, like, I'm not going to rug pull and just end it tomorrow. So that's why I'm like mentioning in every video, not to shill it, but more just to say, like, I'm being clear here. We want to end this. We're paying 5% plus upside because of the convertible offering is too much. Real estate backed, invest with credit card, ACH wires, no fees, whatever, no tennis toys. We do all that. Real estate backed. Okay, you get it. It's not a solicitation. There's risk with every investment. You get it. 5% yield paid monthly through conversion, whatever. This ends DEES 31. And I'm looking forward to that because then that means we can really like focus on AI next year, grow the company, and it's way less dilutive to existing shareholders. Why fundraise? We can fundraise by selling the actual product or the service, which we are, and people keep buying it, and that's why we've gone positive on our AI investments, which we're excited about. So anyway, Samuel writes, I just submitted an ACH for $50,000. I'm really happy. Well, thank you for doing that. And you just donated $2 for me. You donated $2 to tell me you just sent us 50 grand. You're a nice person. Merry Christmas to you too. Somebody says, what's the risk? We get our money back? No, the risk is you get zero back. That's the nature with any investment, right? So like I'm not trying to shill anybody to invest. The only reason I say these in almost every video is because I don't want this fundraise to close and then people send me emails going, but Kevin, you didn't tell us. I'm like, yeah, I did. Like in every possible freaking way. So somebody here says, I worked at Tesla for 12 years, Lucid for almost 6. What are you referencing? You guys are chatting about such. What I will say, quick little note, I do think Tesla has a really big resistance level here at all-time highs, right? If we can break through this, great. And I think that the time for Tesla to break through is now because everything's, we're on a relatively bullish, slow slog up trajectory now. But there are definitely some downside risks at these valuations. Kevin, I'm trying to invest and reinvest. What's the difference between accredited investor and non-accredited? If you're accredited, I would say use the accredited portal. But there are very small differences. If you read, or just put it into AI. Okay, there's an AI use for you. Take the prospectus for the Reg D, put it into AI. Take the Reg A one, put it into AI, and say, what's the difference? there. But reading stuff, I don't want to give you a summary of the differences because I think they're relatively minor. But I can't replace you actually reading these documents. Otherwise, the SEC is gonna kick my ass. Although Trump, I feel like, is killing the regulators off by a slow bleed. But I actually think that's bad. But we don't have to get political. I thought the Consumer Financial Protection Bureau was actually doing a good thing. So the gutting of that is a little disappointing. And I wonder, what bubbles we create when there's less of a government restriction. But then again, who knows? In fairness, to be a little biased, I'm invested in Netflix, and I kind of want them to buy Warner Brothers. I think they're a behemoth, and they're cheap. The stock's been on a near-term downtrend. I think they're cheap. So, anywho, that's my take. Appreciate y'all being here, and